Oswald Private Wealth joining us this afternoon. Amit, great having you. Let me first start off by asking you the golden question. What are you allocating or how are you allocating fresh capital? What's your guidance right now for viewers?
Yeah, so I think that's very interesting because we were sitting in cash also in our portfolios to the tune of around 20-25%. And eventually, we are also seeing that despite crude oil prices going to almost 100, 105, $110 per barrel in that range, the markets have become little more resilient. In fact, mid and small cap, stocks, if you see, they were resilient in the recent fall also, and they have been performing well in the recent up move also. So we feel there are few themes where we are allocating more, and the primary theme is power, because somewhere we have a feeling that we are going to see very intense summer and El Nino impact may be there. AC sales can increase this particular year, and the electricity demand, which was hardly 1% last year, it can go to even 5-6%. You are already seeing the peak power demand. Last year was 242 gigawatt. This time it has already made a new high of 256 gigawatt, and it is likely to move to 271 gigawatt. So I think power as a theme is looking very good. And in that, if you bifurcate, then I think renewable as a theme, we are also looking at, because the recent Central Electricity Authority, they came out with a projection of overall energy capacity of India, which is 538 gigawatt. They said that in the coming decade, it can go to 1121 gigawatt. So it's a 108% increase. But when I look at solar, it is 143 gigawatt, and it is likely to be 509 gigawatt. That means 255% increase. So that means this will remain a high growth segment, and we just have to put money into those players who are looking for margin expansion in the solar segment. That means they are going for backward integration into solar or into ingot wafers also.
Okay. Amit, in terms of your allocation currently to gold, silver, are you at all increasing the allocation given the uncertainty? How are you playing that part of the trade?
So we have kept it constant
Okay.
around 10% now. So we are neither increasing it nor decreasing it. But the equity allocation, definitely we are sitting around 55% in large caps and the remaining 45% in mid and small caps.
Okay, understood. And let me talk sectors, Amit. You spoke a little bit about some sectors that you're liking, but give us the top three sectors on your buy list right now, and give us maybe a few lines in terms of thesis as to why you seem to be liking those.
So, see, very unique sectors are coming up. For example, when I look at auto ancillary as a space, now auto ancillary, I think, can give you better returns because the market is opening up now for new FTAs. And I think finally you will have the signatures, the everything done in financial year 27 from Europe, from UK. And this is where some of the export oriented sectors, for example, auto ancillary and the textile, I think they are looking better to us in the mid and small cap space. And when I look at auto ancillary, there are companies in this space which are also in decorative aesthetics. I think that's also very essential. Not necessarily an auto ancillary has to build a component which is required in the final composer of passenger vehicle, but just to give a look and feel, just to give a more luxury feel. I think this is where more designing will come into picture, more R&D will come into picture. The margins in these type of components can go to 24 to 30%, and I think those companies are coming up in India. So, and if you look at, if you do a hard work, you will find some companies like that in this kind of decorative aesthetics domain, around 5,000 crore market cap also, where there is a substantial room for growth.
Interesting. And Amit, talk to us about the sectors which are currently not being preferred, or rather have suffered some serious underperformance. The likes of private sector banks. How do you sit on those?
So our sense is mid-size, private size banks can do better going forward. See, PSU banks were also looking fine, but if the crude prices are going higher and the bond yields can surge because of that, then I think the treasury profits can see some dent in the PSU banking because they have a larger chunk in the treasuries also, because they are holding good number of GSECs. But when I look at mid-sized private bank, I think there are certain companies which are doing exceedingly well. Credit growth, it is growing much higher than the industry. If the industry is growing at 11% or 12%, there are some mid-sized private banking companies which are growing at 17% also in credit growth. They are garnering 16% of deposit growth. They have a return on assets in excess of 2%. They have a return on equity around 18, 19%. So I think if you look at the GNPA also, there are some companies which have only 0.7% of GNPA, and particularly from the southern part of India. So southern part of India, those banks are doing good, which have around 900,000 branches. I think we can particularly look at those areas, and I feel they will grow much better. See, going forward, if the bond yields are going higher and interest rate starts kicking up, if I am assuming this scenario going up, only in that case it can happen, then it may be little negative for NBFCs, but maybe positive for banks.
Okay. Okay. So yes, that's negative NBFCs, positive banks. Amit, give me a sense, this new ECL framework, how negative PSU banks, and given the fact that PSU banks have seen some serious outperformance versus private sector banks, could there be a shift or a tilt? And is this that point, according to you?
See, in fact, if you see from 2018-19 onwards, there is a significant change. There is a significant improvement which has come in PSU banks. See, they had the slippages of close to 2,86,000 crore. Now they are sitting at a slippage of hardly 65,000 crore. If you see private banking, which had a slippage that time of around 70,000 crore, they are sitting at a slippage of around 1,20,000 crore, because there have been certain instances of moving into microfinance big time. So my sense is PSU banking, which was losing market share to private banking also, there is a significant improvement in technology. And this is where, and also in terms of deposit growth, they are doing much better, because we have seen instances of some cooperative banks also going down. And so I think the pupil interest has gone back to put deposits in the PSU banks also. So they can do better. Their loan to deposit ratio is much better, I mean, much lower than the private banks, some of the large cap private banks. So only thing is, if this provisioning, I think you are talking about, that if more provisioning has to be kept, see, we are looking for long term investment. We feel the risk to the risk adjusted return will be now much better, because you are not going to have many negative surprises. So market will give you a consistency of returns. And I think this is where it is, if the mid-size banks also can do better, because there was a more chance of getting some negative surprises. So it's a good step which will be good for the broader banking index.
Interesting. And where do you sit on where IT is concerned? Is that at all an allocation in your current portfolio at all?
So we don't have exposure. We have, in fact, we did not have for some time. But valuations are very attractive, no doubt about this. If you look at TCS 16 times valuation, margins are still around 24-25%, though the volume pickup is not there. And if you look at those companies which are increasing AI exposure, I think they will garner better growth going forward. When I look at some large cap IT companies like TCS in Q3, Q2, they had some exposure of around 5.5% to the AI in the overall order book, which has now grown to 7.5%. So they are improving, but still it is lower in terms of the total order book. So that is where the execution will still remain a question mark, which is a problem right now. The order book is not a problem for IT companies. The execution, the delaying of the projects is the problem with the IT companies, which is not getting reflected in the revenues. So those companies who are more into AI, their execution can be faster. So I think mid-cap IT can come back after some time. Currently, they are down. And so my sense is the growth will come back faster there.
Okay. And how do you play the AI trade, Amit? Because there's such limited optionality. I'm sure that's one question you get all the time. There has to be some way to play this, right, in the Indian marketplace. What's the most efficient, or where is it that risk reward is the best at this point within the AI trade?
See, I think there are 2-3 ways you can look at this. One is the equipment manufacturers for the data centers, maybe server kind of companies, ancillary companies. Maybe if you look at the genset companies, because continuous power is required in the data centers. Then I think the rare earth companies also are there, which are going to be benefited, because these critical minerals are required for semiconductors also. I think that is how you need to look at this space. We don't have direct players for AI, but we do have the rare earth reserves of almost 8% in India. And China, when they put the curves actually on the rare earth export, that is where we realize this, that we have to deep dive into this more. And I think those companies have already started performing now. So that is how we can look at. I think IT companies, they are working on small modules for artificial intelligence. And the next phase for IT, from body shopping to the services, I think it is going to be some product proposition also. Because if you are creating some own built small modules for AI, that means you may garner a better price to earning going forward because you will become a more product company. I think that is a transition phase for them, but eventually I think that is how it is going to turn out.
Okay. Amit, great speaking with you. We've spoken on a wide array of things. Thanks so much for coming in and giving our viewers that perspective.
Thank you.
All right, and viewers, what we'll do is slip into a very short break and come back with more. Stay with us here on ET Now.